Welcome to GTrend Futures 1, Hedging Protection. In this video overview, we will discuss the settings and how this trading strategy functions systematically. This is a futures leverage trading strategy that utilizes a multi-layered dollar-cost averaging entry grid and a dynamic cross-hedging protection mechanism. The architecture explicitly abandons static fixed stop losses that realize immediate localized losses. Instead, it utilizes mathematical counterpositions to completely freeze paper losses when the primary position enters a drawdown against the macro trend. By dynamically locking the paper drawdown rather than exiting immediately, the strategy keeps trading capital actively working inside the market architecture. This diagram illustrates a unified risk basket where opposing long and short positions are mathematically integrated into a single entity. As shown by the tracking metric, the algorithm evaluates profitability exclusively on the combined net unrealized P&L of both sides working together. The hedge and primary positions are managed as a combined basket to execute an exit only when the trend structurally realigns on the 10,080-minute one-side heading period timeframe. When the primary position goes into drawdown against the macro trend, the system executes a counterposition to neutralize risk and lock paper losses. This framework operates through 4 precise phases of structural containment. Phase 1, solo mode. Phase 2, core hedging. Phase 3, micro hedging. And Phase 4, risk lockdown. Forcing market volatility to resolve mathematically entirely eliminates emotional stop-loss anxiety. Phase 1 is solo mode. It begins with the both sides initial TL parameter deploying an 8 USDT baseline probe order. This initial order establishes a directional bias in the market while leaving maximum capital available for potential defensive scaling later. Candle divide levels slices a 7-day chart candlestick horizontally into 5 execution zones. Inside these zones, fast-moving 1-minute chart candlesticks track local price action. When price crosses a zone, the system executes a progressive DCA order, scaled by solo TL mult, to aggressively average the entry price. The solo TL mult parameter functions as a 1.8 times compounding multiplier applied exclusively to consecutive solo orders. This aggressive multiplication intentionally shrinks the mathematical distance between the average entry point and the break-even point. Deploying aggressive compounding during Phase 1 maximizes the probability of a fast single-sided profit exit before the defensive systems are ever required. The solo max pose setting at 50 USDT acts as the strict mathematical boundary where Phase 1 compounding terminates. Crossing this 50 USDT threshold forces the bot to lock all new single-sided entries and await a structural trend flip. When solo exposure reaches 50 USDT and a macro reversal candlestick prints, the system executes a core hedge counterposition to freeze floating losses. This relies on hedging protection set to true, permanently merging the trapped long orders and the new short orders into a unified risk basket. During Phase 2, the system utilizes trading limit mult to calculate defensive volume. When counterposition orders are required, the system executes a volume calculation using trading limit mult of 1.8 times against total live accumulated exposure. This heavy 1.8 times multiplication on the entire basket is mathematically required to aggressively drag the combined break-even point toward live price action. Phase 2 transforms an isolated losing position into a balanced equation, using the market's own adverse momentum to force a break-even approach. The My Max Position setting establishes 200 USDT as the critical capital exposure threshold where heavy scaling becomes a danger to equity. Once accumulated basket volume crosses 200 USDT, the aggressive 1.8 times multiplier is permanently deactivated. When accumulated basket exposure crosses 200 USDT, the system executes deactivation of the multiplier and activates max position micro hedge % to inject fractional counterorders. As shown, it uses a fixed 20% factor based on total exposure rather than aggressive compounding. This phase also shifts analysis to a daily 1440-minute structural trendline constraint to calculate these smaller injection zones. This fractional compression ensures the account can continue absorbing market volatility for extended periods without risking severe overleverage. The reversals max pose setting at 400 USDT forms the absolute maximum containment wall. When total exposure hits 400 USDT, the system executes an ironclad margin freeze, locking all DCA and hedging mechanics to neutralize margin call risks. In this locked state, no new margin is committed under any circumstances, entirely isolating the risk. The system now enters a state of pure macro patience, waiting for a verified reversal on the 7-day one-side hedging period chart candlestick. Once the macro 7-day trend shifts, the system selectively clears the short position at a micro profit and rides the new trend to clear the long position. Establishing an absolute mathematical ceiling guarantees the account is never liquidated by a sudden, prolonged market dump. Fast-forwarding to the resolution of the trapped position basket, the active market movement causes the winning leg to outpace the losing leg. This graph illustrates the hedge gain parameter set to 1. Hitting 1% does not trigger an instant exit. Instead, it arms the stop-take-profit period logic. The daily stop-take-profit period timeframe must validate a chart candlestick reversal structure to confirm momentum is fully exhausted. When the combined net unrealized P&L crosses the hedge gain threshold and stop-take-profit period validates a reversal chart candlestick structure, the system executes a synchronized cross-close, liquidating all primary and hedged orders at a net profit. By trailing the unified profit rather than taking an immediate flat exit, the system maximizes recovery value and clears heavily drawn down grids at a true mathematical net gain. The entire framework functions by constantly shifting control from fast 1-minute execution intervals to patient 7-day macro verification requirements. Mathematical drawdown management provides unmatched capital velocity compared to accepting direct stop-loss hits. Buy GTrend strategies and visit the links provided below to view live trading on the strategy demos.